So I'm going to start with our moderator, Mr. Laddie Williams. He is a business correspondent with Channels Television. He has vast knowledge of markets ranging from Nigerian and international capital markets, commodities, currencies, cryptocurrencies, you name it, he got it, right? All right then. Laddie is passionate about economic matters, tech, fintech, and global business trends. He anchors and produces. Now, it's easy. I don't say it's easy to be an anchor, but in a way, it's like if it's produced for you and you have your lines, you go in there and you just read your lines. But when you produce a business show, that means you are the one responsible for everything, the graphs, the guests, everything that goes on board. So it's really important that I highlighted that not only does he anchor, but he produces business shows on Channels Television, from Business Morning to Business Incorporated to the capital market. And Laddie, of course, is a newscaster, a voiceover artist, and compare. Please put your hands together for Mr. Laddie Williams. All right, then. Thank you so much. All right, then. Moving on very quickly to our next, or rather, to our first panelist. Now, he is the CEO, Commercial Partners Asset Management. I'm talking about Tosin Osunkoya. He's the co-managing partner and CEO of Commercial Partners Asset Management. And as the CEO, he oversees the growing assets and portfolios of institutional investors, high net worth, and mass affluent investors. Tosin is a global financial market expert with diverse knowledge and skills, not limited to global financial instruments, but also identifying and exploiting investment opportunities for portfolio companies, ultimately for wealth creation. Because if we ain't making money, what are we talking about, right? In the last 2 decades, he has dedicated his skills, knowledge, and experience in creating wealth for investors in the global financial instruments. As a serial entrepreneur and a venture capitalist, Tosin leverages his unique skills in investment management and wealth creation to unlock potential in human capital in Africa. He creates platforms for creative minds to express their talents. He also functions as coach and mentor to harness and unlock innate treasures for wealth creation in Africa. Please put your hands together for Tosin Osunkoya, CEO, Commercial Partners Asset Management. Thank you so much for being here. Now, I move on very quickly to our next panelist. I'm talking about Zeal Akarewe. He's the CEO of Graham Blake. Did I pronounce that? I tried. Don't worry. You correct me. Now, he currently runs this Graham Blake Advisory, a financial advisory focusing on risk management using derivatives, and has 25 years post-graduation experience. Very important. Like post-graduation, okay? So you can know where to start counting the 25 years from. Now, he has work experience spanning across West Africa, South Africa, and Europe. After a year in insurance, his banking experience started in 2000 in HR, admin, and corporate banking, after which his treasury career started with Standard Chartered in 2004. Now, after joining Standard Chartered Treasury, he moved on to work in Standard Chartered London in 2006, where he focused on structuring of derivative transactions for the bank's footprint in Africa. And these transactions covered interest rates, commodity, and foreign exchange derivatives. Now, in 2007, he moved to act as the head of the sales team, the sales team in Standard Chartered Zambia, before returning to Nigeria to head the financial market sales, and was also a key member of the Standard Chartered Wholesale Bank Management team. Now, in his time as sales head, he was involved with numerous firsts in Standard Chartered Africa as part of various countries' teams executing the first ever derivative transactions and regulations. Since 2016, he has managed his advisory, bringing financial solutions that span from regulatory interpretation and interface to structuring simple transactions to ensure the optimal result is obtained without flouting regulations. Please put your hands together for this man who has been a hedge advisor on oil producing assets in excess of $2.5 billion. in other financial advisory roles with the oil and gas as well as manufacturing sectors. Please put your hands together for Mr. Zeal Akarewe. Thank you so much for being here. Now, I think our next panelist actually joins us via Zoom. If we can just up, uh, pull her up, and then we'll take her bio in a second. Let's call on Professor Joseph Nana. He's our next panelist. He's the chief economist at the Development Bank of Nigeria PLC. In this capacity, what he does is that he leads the research, monitoring, and evaluation and sustainability arm of the bank. A seasoned professional with 2 decades of experience in the US, mortgage, banking, manufacturing, and telecommunication industry, serving in managerial roles before joining academia. He has published extensively in international peer reviewed high impact journals. His scholarly works have been published in journals such as the Economic Analysis and Policy, Journal of Public Affairs, International Journal of Public Administration, and Politics and Policy, to name a few. Now, he has been a thought leader in macroeconomics and development finance and advises the board and management of DBN on strategic choices and implications of critical decisions under review. He earned a Bachelor of Business Administration and MBA degrees in accounting, a master's degree in applied economics, and a doctorate degree in business and economics from Southwestern Oklahoma State University, Florida Metropolitan University, the University of Oklahoma, and the Agrossi University, respectively. That's to say that this man I'm calling up, he like book. So please put your hands together for him as he makes his way to the stage. I'm talking about Professor Joseph Unana. Thank you so much for being here. I had to just kind of see, they really brought the best. If we read this is a short version of their bio. If I read their real bio, in fact, we'll just be here reading bio all day. But last but not the least, and that's the person that is joining us on via Zoom. I'm talking about Dr. Faith Iyoha. She is a Nigerian economic, part of the Nigerian Economic Summit Group, that's the NESG. She holds a PhD in economics with interest in macroeconomics, international trade and finance, monetary economics, and public sector economics. Now, over the last 15 years, her career has revolved around consulting, teaching, and policy advocacy. She was appointed as a technical assistant to the chief economic advisor to the president of the Federal Republic of Nigeria between May 2021 and May 2023. Now, she's currently a senior economist at the Nigerian Economic Summit Group, an adjunct faculty at the Pan-Atlantic University, and a partner at Kanos Egbe Consulting Limited. Please put your hands together for Dr. Faith Iyoha. Of course, she's going to be joining us via Zoom. And this is where I pass on the mic to the most business anchor in the room.
Thank you so much, Shaitan. Definitely, I was telling her earlier, with how well she performed, I think she should also be on the business desk, too, with entertainment, add more work there. All right, thank you all, and I want to say a big thank you to the Commercial Partners team for giving me this privilege to host this panel. And we're going to be looking at it from a global perspective, at this point. It's funny how things that happen outside your shore actually impacts you, in your country, be it the trade wars or, I call Donald Trump the bull for most markets now, because we've seen how his presidency has taken a couple of asset classes, to new highs at this point. So we're going to be unpacking all of that here with this incredible panel. And I've had the privilege of, speaking to, some of you on my show, on Business Morning. So it's almost like an extension, at this point. Thank you all for being here. And, we can't talk about the global economy without talking about the U.S. at this point. I'd say the U.S. reminds me of, sometime, if you're a football fan, there's some teams that dominated the world. They won all the cups, they won all the leagues, And now they're not doing that anymore. They're somewhere around maybe 10. Shout out to Man U fans. Um, yeah, so, looking at the US at this point, they are the leaders, right now. They've been there, since World War II. And before them, we had the British Empire, we've had the Dutch, Empire. So we've had, countries that dominated at some point but lost it. But the US is holding it right now. But there's chatter that they might lose that position at some point. Earlier, we did hear from Uba that that might not happen anytime soon, but it seems like it's going to happen at some point. Maybe not in my lifetime or our lifetime, but we'll see that happen. So I'll start with you, Prof. At this point, what are you seeing? When it comes to the U.S., losing that status. We're seeing ballooning debt and the issues that normally affect countries like Nigeria. Affecting them. What do you see?
Okay. Can everyone hear me? Good afternoon, everyone. Thank you for having me. And Laddie, your question is apt. So, without being too theoretical, I'm going to give a background to my response before giving you a precise answer. First of all, the notion that the U.S. is losing its status, hegemonic status, if you will, is true. And that's simply because any time a U.S. president, any leader, says America first, Britain or UK first, Canada first, the reality is people will withdraw. If you become self serving initially, which every country, believe it or not, is actually selfish. As human beings, we are naturally selfish. You teach you to be selfless. That's the talk. So when we look at the notion of its losing its status, it is true. And this is against the backdrop of look at the U.S. contribution to NATO. President Trump has said he's going to wind that contribution down. That's one. Just yesterday, I saw the news regarding the U.S. withdrawing or reducing its contribution to UNESCO. That's two. Additionally, and let's not forget, the Bretton Woods architecture, whether it's the UN and the respective organizations under the UN umbrella, the US wants either more say or, at the bare minimum, other folks contribute more their fair share, which, in my humble view, it is actually correct. If you want greater say, you must pay the price. That's how the world should operate, in my opinion. Notwithstanding, the real question is, even though the US is losing, for the most part, its moral authority, I don't see China filling that gap either. And that's simply because China still has internal issues regarding transparency and so on and so regarding its, if you like, closed economy, because the economy is not really as open as people think it is. So, and historically, you've seen, like Dr. Uba noted, that you have world powers, whether it was the British Empire and so on. Everything has its cycle. Everything that has a beginning must have an end. And the bottom line is the US has hit its peak and now it's going down towards the trough. That's the bottom line. Every business has its business cycle. Every economy has its natural cycle. Consequently, if you check global leaders, the European Central Bank, Catherine Lagarde, if you take a look at what the Canadian Prime Minister, who used to be the Central Bank Governor of Canada, and of course the Bank of England Governor, what he said is indeed the U.S. is on a downward cycle. So every indicator points to just that. So the notion of America first, Laddie, speaks to the fact that the U.S. is pulling out and focusing internally. But when you do that, you kind of alienate yourself and you lose the convening power. You lose that moral authority to say and do things that you would typically do when you are basically spending to gain your power. And that's what historically has happened in the past. So, what do I see coming in the future? There will be a tussle, but I do believe it will be multipolar. China will be there. Germany. You know, in the EU, if Germany sneezes, the whole region catches a cold. That's the bottom line. I see Germany playing a role. I see the US still there. But be sure, in the US, I can tell you for free, the US has its own political cycle too. Sometimes you have strong men who test the strengths of institutions, i.e., President Trump. And sometimes you have globally accepted leaders like President Obama who holds hands, kisses babies, and wishes peace everywhere. In the end, the bottom line is this: you still have these characteristics of leaders coming up and retreating over time. That has been the case all the way from JFK in the 1960s to, if you like, Richard Nixon, I am not a crook, all the way to Donald Trump, America first. So you have these, the strong men personalities who try as much as possible to push their narrative. It doesn't necessarily mean it's going to play out favorably, but ultimately, I sincerely believe there's going to be a multipolar future. Many countries will have a say, and it has to be collaborative going forward. Thank you.
And I guess, put your hands together for him, please. And I guess in Nigeria, ours might be Emilokon. Or maybe not. Yeah. All right. So, let me come to Mr. Zeal now. So, definitely from what Professor Nana said, they're on a downward trend, at this point. But do you think this downward trend is regardless of who's leading the U.S. at this point? Do you think President Trump is fast tracking that decline, or maybe he's putting up some kind of resistance? What do you think?
Thank you very much. I think a lot of what Professor Nana said is apt and accurate. It is what I think is we need to start from the reason America is the world power. And if you notice the panel before us, and not just them, anywhere you go, when there's a comparison with Nigeria and anyone else, the default country is America. America doesn't do this, America doesn't do that. So why is America the world power? I think there are three key reasons. One of those reasons is Hollywood, or what I like to call propaganda. We all interact with America via Hollywood, and they've made us believe something about them. And I'll tell you a short story. First time I went to New York, I landed in New Jersey and then we drove into New York. My mouth was open all through because all I was saying to my friend that picked me up was, this is not what I saw in the movies. There were potholes, there was rubbish on the side of the road, and I was like, this is not what I saw in the movies. They've made us believe something about them that is fundamentally inaccurate. You watch CSI, if you go and rob somewhere and you drop an eyelash, they will find you. So they make you believe something, and that's one of the reasons they're a world power. They've captured your belief system. Second reason is their military power. There was a point in time where boots on ground determined a country's strength. And so how many soldiers you had, how many tanks you had, how many aircraft carriers determined your ability to intervene in crisis or influence using force other countries. America was top of that, which was the period of the Cold War, where they were going neck and neck with Russia, and they didn't want Russia to be that, and blah, 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 blah. The third reason is, for some, in one way or the other, they've convinced the whole world to make their local currency the global currency. And so we're just talking, our GDP is how much? Who knows our GDP? How much is our GDP in Naira? Now, we all know our GDP in dollars, but we don't know our GDP in our own currency. So America has convinced the whole world to make their local currency that they can print and control, like if President of ours famously said, if money is missing, America will know. Right? So when you put these things together, are those things still, are they still relevant? Are they still in control? So, like Femi Adebayo said, as Nollywood begins to push out its own narrative, as South Korea begins to push out its own narrative, as people with social media, the truth, well, let me not say the truth, with social media, there is more accuracy in reporting than what Hollywood gives us. So, will America lose that mystical ideology that has captured the whole world? I think they will. Has the world also moved on from the type of warfare that requires boots on ground? Now we're talking about trade wars. Trade wars have always existed, but ever since Trump came in, you can see that the shift there. He has now weaponized America's ability to institute and twist the world in a trade war. Now, the risk of Trump doing that is that it forces countries to protect themselves from that. What Trump is doing now regarding trade is exactly the reason the WTO was set up, to prevent this. You know, almost like how NATO was set up to prevent USSR from doing what they did before. WTO was set up, and he has debunked all that. So if you look at those individual things, you'll find that inevitably, the way the world is moving with technology, with artificial intelligence, and all of, I mean, for example, the conquest of space. Why was there a rush between America and Russia to conquer space? I keep wondering why. If you look at what satellites are doing now, then you'll understand why. So with all of this, it's inevitable that as other countries begin to strengthen their own ability to control their own narrative, the US ability to influence them reduces. It's inevitable. And unfortunately, that inevitability is not being harnessed in a way that promotes American interest in global influence. Instead, we now have a president in America that says America first. And like Professor Nana said,
Right.
the moment you say America first, what you're saying is, as a global leader, I'm no longer interested in directing global affairs. I'm now interested in directing my own affairs. And that creates a vacuum. So the question is, who fills the vacuum? Everybody looks at China. I mean, given how they've risen, it is logical, but I'm not sure China is even interested in filling that vacuum. So maybe the vacuum will just get defragmented and everybody will just fill it in one way or the other.
Some way, somehow. We just fill up that position. I'll put your hands together for him. So, good response there. But we have a lady, on this panel, even though she's not physically here. She's joining us via Zoom. I want to bring her in right now, and that's Dr. Faith Iyoha. She's an economist, Nigerian Economic Summit Group. Thank you so much, for staying on. I know the men have been speaking. We need to hear you now at this point. And I know you have experience when it comes to international trade, and we can't have this conversation without talking about the tariffs and counter tariffs. So I'd like to hear from you now. Talk to me about your position, on the U.S. also losing that status as a leader, world leader, and how you're seeing all the geopolitics and trade wars at this point. Who wins the war, in your opinion?
Okay, good afternoon, everyone. Thank you very much. Can you hear me?
Yes, please. You carry on.
Can you hear me?
Yes, we can.
Yes, we can.
Okay, great. So, there's been a lot going on. We can talk about the trade wars, we can talk about US losing their status. So let me start. In terms of losing their status, their status will decline, the dominance will decline. There will be a relative shift in power. The US will remain dominant in some sectors. So, for example, I think Mr. Field mentioned the military capacity. Yes, they will remain dominant in the military capacity, even though that is a big threatening. The currency will remain valid. Currently, it's when you want to go into international trade, US currency is used for over 90% of the trade that's carried out worldwide. So
Yes, yeah, I experience this a lot when I'm on air with a guest joining me via Zoom. This happens, the internet, yeah. So definitely we'll try and get her back on, but at this point, let me bring it back here. We'll try and get her again. So definitely it's still about what we're seeing play out, and I'm going to bring you in now, and that's Mr. Tosin Shunkoya. At this point. Um, we've heard so far, that it is happening. The U.S., losing that status. But I want to bring you in now to talk about the money. At this point, who stands to gain? At this point, how do you position yourself? As an investor. Seeing that the U.S. is losing that status. Gradually, slowly. We've seen how the Trump presidency has impacted a couple of portfolios at this point. A lot of people have made money.
All right. Thank you, Ladi. Before we go into money, because what drives money making is actually the economics behind it. So if you allow me to just share my thoughts on the U.S., dominance.
Yes.
After the Brentwood conference in the 1944, right, America was very, very deliberate about who would be the world leader going forward. And they were very strategic in three areas. Some of those areas Zeal had actually pointed out. One, the military might. America has always been a bully. I'm sorry, I hope that this will not come up in one of my visa interview. Unfortunately, they are. Because, come to think about it, if you actually want to get something done, you might need to apply some force. And for each one of these strategic investment or positioning, they backed it up with institutions. So, hence NATO. In fact, America, yes, built on SMEs, but what makes America what America is today is the strength of the institutions in America, and that's what most countries don't have. Even I'm not sure China has that, or Russia. So military might, number one. Number two, economic power, resources. Today, and when people talk about, oh, they are losing their dominance, I just wonder, okay, yeah, maybe gradually they are chipping off. But it cannot happen in our lifetime. All of us here. Everybody here today, all your devices, everything that you use to start your day, they are likely being developed in America. Starting from Microsoft, Google, Nvidia, AI adoption, everything. And they started out not from now. They've been planning these many years ahead. And number three is political might. America is in the center of any war, whether directly or indirectly. And they need to do that because they want to control the world order. So if you look at all of this, in fact, the last one, so they thought about the emerging market or the frontier market. That's largely, Africa and some in South America. Guess what America decides to do? Let's give them AIDS. And so they set up what? United Nations. And America is also driving that. For the economic might, in terms of financial resources, let us be at the forefront of SWIFT. That means that if you want to do any form of global trade, it has to go through that platform. They can shut you down. And on top of that, the currencies, the world currencies, is actually what? In USD. So when you look at all of these, America is systemically, just like when we have in Nigerian, financial system or financial services, and there's a balance that some banks are systemically what? Important. America is systemically important. 26% of the world GDP is from America. America's GDP is about 22 trillion. 26%, that means when America coughs, the rest of the world, what? They catch cold. So in terms of that dominance, I think it's going to take a long time for you to wipe that strength out. If you look at BRICS, you cannot point out to one leader that's going to lead that community or that group. Is it China, India, and Russia? These three guys, each one of them, they have their peculiar strength, and they are also egocentric. So you ask yourself, who is going to lead that pack? So when you talk about the dominance, you need to understand back from the 40s and how America over several decades have evolved to be domineering. Recently, we started studying about the military might of America, and we stumbled on a company called Palantir. Some of you guys probably have heard of Palantir before. Palantir wars are no longer fought by foot soldiers. They're no longer fought by foot soldiers. Palantir is a company that's been investing a lot in military might. It's an American company. What they do is that they predict the war even before the war starts. So they predict what you are going to do. They predict your own your military resources, such that when you go in the air, they've counted it. That is how far America has invested. Now let's talk about money making. Most of the asset classes are elevated at this time, so we need to be very careful what you invest in. The commodities, for instance, that have gone up. Gold in the last 6 months has moved from 2,400 per ounce to about 3,400 to 500. That's almost about 40 to 50% increase. And I was reading somewhere that America might actually revalue gold to about 15,000. I don't know if that's true, but for when you hear those rumors, that means some people must have considered that thought. Copper as well. Copper is very integral to the world order. You know why? Most of the devices that you use, you have copper elements in it. Copper has also moved up by 40%. So cocoa, the same thing. So if you look at the commodity space, we have most of them at all-time high. So you need to be careful where you put your money into. So the next question is, Tosin, so where do I put my money? Perhaps you could actually keep your money in cash for now, because this could be a bubble waiting to burst. And again, it's important for you, for any of these investment that you want to go through, you partner with a professional, someone who's been in this business, who understands the business. So on a final note, Laddie, what we are beginning to see is actually a movement from traditional asset classes to real assets. And when I talk about real assets, we're talking about real estate investments. A number of the youth are actually moving into digital assets. We've heard about tokenization of assets today, cryptos. That is another movement. In fact, cryptos is not just a digital asset, it's a movement of the youth. And trust me, when we're talking about the youth, I'm not talking about only the Nigerian youth, the global youth, the recognition and adoption of cryptos are on the rise. Then you talk about some commodities as well, one of which is gold. Thank you.
And put your hands together for him. And that's why I don't like bull markets, at this point, because if you've been on the sideline, it's difficult to find an entry, in the bull market. And there's that FOMO, fear of missing out, and that's how some investors end up buying the top, and it goes downhill from there. Everything is overbought, at this point, if you check, technical analysis. But let me go back to Dr. Iyoha now. I believe we have her now. Doctor, can you please finish your thoughts before we lost you there? It's the internet, it happens.
Thank you very much. Thank you. So I was saying that China currently is extending influence in terms of infrastructural diplomacy and through Belt and Road initiatives. And Russia is putting back some expansion against the NATO. So these are some of the dynamics about the US dominance. But what's important for me is how this affects Nigeria. So essentially, it is an important point to start re-strategizing and to start taking opportunities. We shouldn't wait for the opportunities to get to us. We need to start edging out. We don't need to overexpose ourselves, especially with the singular US power. And
Okay, I guess it's happened again. All right. We'll try and get you back again, Dr. Hila. Thank you so much, for that, and definitely she was trying to explain, trying to bring it back here to Nigeria and how Nigeria can hedge, against what's happening in the global space at this point. And talking about happenings in the global space, a lot of central bankers globally, they've been acquiring gold. They've been buying a lot of gold, at this point. And, some would say, and it's because of them we're seeing, gold prices rise, so high. And, we know gold is for, uncertainty. And at the same time, we're seeing risk assets also rise to get to new highs. So, Prof, at this point, they're buying a lot of gold. China, US. I think this season, this is the highest, they've accumulated so far, over about 1,000 tons, of gold. Why are they buying so much gold? And should I be buying gold?
Okay, fine question, Miley. The answer is yes, you should buy gold. That's always good. It's a very safe asset. Only it's a store, a significant store of value. So everyone technically should have some gold. I can tell you for free, my wife, she buys a lot of gold. I always tell her, are we going to benefit from the price that you plan on selling it? No, I'm not selling it. But it's okay. But the idea is to buy gold is fine. But the rationale behind the gold buying, in my mind, and broadly speaking, if you take a look at what emerging markets is happening. So, for example, if you want to support industrial growth, sectoral growth in the mining sector, for example, if your central bank chooses to support you by buying gold internally, which a lot of emerging central banks are doing today, it spurs economic growth. It has its own multiplier. So you can see the value chain being created there, meaning that not just are you extracting raw gold or raw materials from the soil, you're also building the capacity to refine it, make it jewelry and other aspects and so on and so forth. So in a way, it supports industrial growth and industrialization. In a way, it also gives central banks diversification in its asset class. Not just holding, for Nigeria, for example, it's largely dollar and gold, largely. And the dollar is actually held outside of the country. But the objective here is that the natural order, when you have so many different assets, you have stable coins, you have bitcoins, you have all kinds of different assets that central banks and market players are investing in today. It's only prudent for banks to actually diversify their asset class in order to mitigate future shocks. So holding fiat currencies, for example, if you're holding dollar, dollar has lost in value for about a few percentage points for the past few months. Dollar has declined a bit. However, conversely, gold continues to appreciate in value. So that diversification in your basket of reserve currencies is key. So, for example, the Nigerian Central Bank has a lot of revenue, the Chinese yuan, the Chinese currency, as the US dollar as well, because of the Chinese currency for swaps, but also in a strong form. But the idea behind the diversification is to mitigate against potential shocks, which is occurring all the time. I think Professor Leggett mentioned these shocks, endogenous or exogenous, In other words, within the economy of coming from outside the economy can affect businesses across sectors. So how we mitigate against these risks is prudent. So that's my submission around the question, why central banks are, and it's largely happening among emerging economies because they have more volatility in their currency.
And we've seen, Ghana profit, from that, rising gold demand. And let me come to Mr. Zeal now. Do you see this? Do you see this continuing? At this point, this gold accumulation, or do you think the central bankers are reaching some kind of peak? At this point, do you see other assets, being accumulated?
I think the accumulation of gold and other assets, I think it's a direct reaction to an American president policy. It's a direct reaction to, when Russia, Tosin spoke about SWIFT, when Russia but during the Russia-Ukraine war, America switched off Russia from SWIFT. And even though that was an aggression, but you see, the whole world noticed and said to themselves, we're vulnerable to America. We're vulnerable. Our entire existence on trade and interrelations with other countries, our ability to settle transactions, is vulnerable to the decision that America will make that is political, not economic. And once you do that, what happens is everybody's going to start looking for an alternative. And if you look at China, for example, I was on the China-Africa Trade Corridor team back 2007, 8-ish. And what China has been doing since then, it's very interesting that no other can copy them. One of the key restraints they had was, like Professor Nana said, the economy is not very open, right? And they know this. But what they did, and many people don't know, they created a second currency. We all talk of the Chinese yuan. If you're a treasury person, currencies have 3-letter codes. China's currency is CNY. They created CNH. So what happens is CNY is used in mainland China, in the country. CNH is used internationally. So they understood their vulnerability and they started solving it, and we're talking 20 years ago. When you follow that from their own prediction of what would happen and what is now actually happening, and the fact that the current US president has behaved in a manner that shows he doesn't have a lot of regard for bilateral or multilateral agreements, then it makes sense that other countries are going to reduce their vulnerability to US exposure. And so, do I want to hold their currency? Because all dollars, once it's electronic, all dollars other than dollar cash, you know where it sits. It all sits in New York. So your dollar in a bank in Lagos, your dollar account, is in New York. And so when central banks realize it, they're asking themselves, do I want, if New York were to switch me off, what am I going to do? So I think that is one of the reasons why the accumulation of other assets other than the US currency will continue to rise over time.
Right. And we called it the great de-dollarization, at some point where we saw Russia trying to find ways around being switched off from SWIFT. So Mr. Schumann, definitely when there's a problem, somehow there's some kind of solution in there. So talk to me about how you're seeing this whole gold accumulation phase at this point, and what it's and how your clients are also reacting to that at this point, to gold accumulation. I'm sure some of them are saying, no, I want to buy gold too.
Yeah, I think we believe that the demand for gold will continue. I think the rally is sustainable for 4 major reasons, and we continue to educate our clients that they should invest in gold. The first reason, in my view, is for risk management. So if you have a portfolio of other asset classes, it's important for you to put gold in the mix, okay? Because gold will help you to absorb the shocks, and economic shocks will certainly come. Gold is seen to be one of the safe haven. In fact, when you look at anytime there is a flight to safety, okay, capital flight globally, people rush into gold, they rush into USD, they rush into Japanese yen, they rush into Swiss franc as well, because all these asset classes and currencies are considered to be safe haven. However, and from what Zeal and Professor Nana had said, we are beginning to see less reliance or less confidence in the USD than other countries. And other countries are beginning to think about what other asset classes can they hold on to. So that takes me to the second reason why I think that gold will continue to rise, is sovereign dominance, protecting your turf. Protecting your turf would help you when you have economic power. So you will see other countries continue to buy more gold. That's number two. Number three, speculative reason. Everyone here, after this session, you're probably going to call your broker or call your asset manager and say, please, buy more gold. For the ladies who probably have been acquiring jewels, they always start saying, sweetheart, to their husband, your next salary, please. Let's buy a gold-plated bracelet or a Rolex. So you will see for that speculative reason, it will continue to go. Then the fourth one, which I mentioned earlier, is the fact that safe haven, not only for countries, but individuals as well. So for these various reasons, you would see the gold prices go up.
I'm not going to respect the charts at this point, even though it's overbought. It doesn't care about that. It's just going to keep rising.
So Ladi, just like any other asset classes, right? You will see a channel, and I always educate everybody that tends to listen to me. You see a channel of an upward trend like this. Within this channel, there will be a pullback. The medium to long-term trend is it's going up. But within that channel, you would see the pullback. So it's at 3,500 now. You might see a pullback to 3,300. What happens is that those people that missed out when it was at 3,000 or 3,200 will quickly go in and buy. Some other people that have long-term view will begin to do dollar cost average, which means that they will buy when it goes down, knowing that there is an upward trend.
Definitely, that's from the professional, right there to find ways to enter, asset classes than huge bull markets at this point. You always have to find an entry, regardless. And please, again, if you have questions, don't forget to, put them down, and we'll get, some of those questions. I'm sure you're itching to, find out what you should be doing, at this point as an investor. So let me take it to Dr. Ihoa now. I believe, you're here with me. I've been watching you with my side eye, and I've seen that you've been there. There's been no interruption so far. I hope it doesn't happen again. So talk to me about how you're seeing, all the gold accumulation at this point, and you can also try and finish up with your thoughts before.
Okay. Network is really bad on my end, and this is one thing that we're talking about. We're talking about quantum technology. We really need to improve on the infrastructure. It has been a mess. I have always been afraid of this, that this network is going to just something else, but that's fine. So I'm talking about exposure for Nigeria, and the greatest risk that we face is the risk of exclusion, right? We are moving somewhere. Technology is already a fast pace. Things that we need to start doing something about that. The risk of exclusion, we need to seize the opportunity to deepen our infrastructure, to localize our value chain, to then improve on digital export. Digital export. We need to be realistic in our thinking. There's need for realism. We need to become more domestically competitive, because what a stronger dollar does for us is it makes us more competitive. But now the dollar is weakening, then it means we are less competitive when it comes to trade. Then it means we have to use targeted tariffs wisely. We can expand to global south. Then we can also talk about strengthening our trade resilience through policy consistency and agile execution. Now, there's always policy, but there's always a lacuna between policy and execution. So we need to be agile about executing policies, and this is the time to really take strategic position. It is also important for us to specifically deepen our fintech and logistics, especially when we talk within the context of intra-Africa trade. We need to start talking about catching up and integrating smartly this technology in our various processes, from governance to export to trade, to even managing our monetary and fiscal space. It is important. Then lastly, I'm trying to rush this because I don't know what the network is going to do in the next few minutes. Then lastly, I think I agree with the other panelists that talked about diversifying our reserve. Now, the increase in dollars has already given a direction that we need to start diversifying our external reserve. We need to include other strong currencies. And in terms of trade, we need to start finding our foothold within this African intra-trade. We need to take the lead so that we can actually call the shot. And what do I mean by that? If we can call the shot, we can make our own currency the local currency for intra-Africa trade. Thank you.
Fantastic. Thank you so much. Please put your hands together for her. The internet did not disrupt that one. Thank God for that. So, definitely, I did say, if you have questions, that you want to ask right now, this is the time, because I don't know when you're going to see an incredible panel like this again. So if you have those questions, let me know so I can share them right now. All right. So while we're waiting, for that question, definitely. So, at this point, we're looking for the future. Everybody wants to, either be on the right side of that investment or at least have some kind of hedge, because the shocks are going to come, according to, Prof, earlier. So we want to be prepared, for that. So what do you think now, Professor Nana, before we get, to the questions, coming, what are you seeing, in the future? What's the right hedge, at this point to those shocks that will come?
Okay, so that's a very broad question because shocks come in different forms. It could be a policy that we create as a country, endogenous, that can shock us. For example, the shock of a policy pronouncement such as subsidy is gone. That was a shock in itself. Consequently, we have had to now recalibrate how we operate in the economy. Some folks started ride sharing. Some folks started doing work from home more seriously, and so on and so forth. But broadly, we can take a look at what AI is doing. I like the SEC, the SEC DG. He said a lot about what is coming to the fore. But ultimately, the notion of regulations around cryptocurrencies and even stable coins, which begins to make me think that Nigeria is jumping on the bandwagon to adopt this as well too. And my thinking around that is be careful. I always err on the side of caution. I'm just naturally a pragmatic person when it comes to these types of investments. Stablecoins seems to be a good type of cryptocurrency because it's underpinned by a fiat currency. However, the transparency of it is still being called into question, even in the U.S. as it is today. The SEC there is still looking at some document to prove or to investigate whether they're abiding by the regulations and so on. So I would just say cryptocurrency is one, and its effect on the economy. Financial intermediation. This, in my view, is critical to help propel a $1 trillion economy when we are currently, after rebasing, at about a quarter of a trillion, so around 242 billion, which means we have gone backwards, not forward. So it means we have a lot to catch up. And to be sure, to do that, it means a structural policy. China, for example, had a 100-year plan. I know 100 years is a long time from now, but it comes like yesterday. We need a structural policy, maybe a 10-year structural policy that we continue to monitor, to evaluate, to track whether it's working, tweak where we need to, and finally, we need an industrialization policy that speaks to the dynamics of the economy. This will only help us grow the economy from the bottom up, not from the top down. Thank you.
So put your hands together for him, please. I do remember the last time, talking about your concerns there with stable coins. I remember the algorithmic stable coin that they pegged, at some point. A lot of people lost money, for that. So, but now let's take some questions now. Let's, who do we have first? Who's number one? 2 questions. All right. So I'm gonna give you the mic. Name, question.
Thank you. Thank you very much. Good afternoon, everyone. I'm glad to be here and to listen to the great team of panelists we have here. My name is Bethel Ulujobi. I'm the trade correspondent at Business Day. My question is particularly to the missus on the screen. She talked about trade, right? And it's a very important question because, very important topic right now, because the question of Trump. I was just speaking to someone a while back, and I was trying to talk about the tariffs. Tariffs are coming back. Trump gave August 1st as a deadline, and so far, of course, nothing has really been negotiated between Nigeria and the US. So my question is, what is the fate of export diversification? We talked about assets diversification, and I'm asking about export diversification. What's the fate of export diversification, especially as Nigeria looking to build this trade competitiveness? Can we do without the US? Can we do without exporting our non-assets or non-oil exports to the US? What is the position of this? Where do we look to? You talked about extending to the global south. Where the global south? Who will be ready to talk to us? How do we make sure that they are ready to talk to us? Again, I'm just asking about the practical ways we can make progress, especially under the AGOA that we know is threatened right now. Thank you.
Thank you for that. So, Dr. you have the floor.
Yes. Okay, thank you. I would like to say that you cannot look outward until you look inward. Right. When we are talking about trade, the first point we already have the after. How are we leveraging AFCFTA? How are we leveraging? So we need to do our own internal or domestic review of what competitiveness is about. And competitiveness is about production and not just focus on primary products, because that's what we do. We need to start creating addition to the kind of product we are exporting. So we just produce oil, right? How do we refine to start supplying refined products? And don't forget about the fact that we're talking about green energy. So the world is moving away from oil. And at a point, this will not be very, very lucrative. But what are the other products that are available that we can produce inwardly? Now, let's even look at cocoa. How have we produced manufactured into beverages and they are sent back to Nigeria at a higher cost? So we should look at including adding value. Move away from just
All right. Yeah. Okay. All right. So at least she was able to answer your question. I hope you were able to get something from that. Definitely you did. Yeah. All right. You can chip in.
let me add to that. The tariffs against the U.S. tariffs. We need to drill down into.
Okay, I think she's actually back now. Dr. Yoha, we'll come back to you. You can conclude now. Okay, that's not happening. Carry on, sir.
The tariffs exclude crude oil. 90 to 93% of our exports to the US is crude oil, which means 90 to 93% of all the earnings from the US is unaffected by the tariffs. So the question is, whatever it is we're exporting, that's 7 to 10%, is it relevant? How relevant? What is the impact of those tariffs to us? Is it going to affect our ability to export there? Personally, I don't think it's very relevant when you look at it from just that perspective, that the huge portion, not huge, a massive portion of our exports to the US are exempt from whatever tariffs we're talking about. So the 7 to 10%, a lot of it falls under the AGOA trade agreements. So, tariffs against Nigeria from the US, I think, are largely inconsequential. Also because whatever it is we export to the US, we can export somewhere else. There's nothing that US needs from Nigeria that is unique to the US, that if they don't buy it from us, we cannot take it to the Philippines or China or something else. Also, just wanted to add a point. Gold is to commodities what the US dollar is to currencies. It is the first thought. It's the most dominant thought. It's not the only thing. So Tosin said gold over the last 1 year has gone up about 40%, right? Platinum has gone up 60%. But platinum is a more precious metal than gold. Nobody talks about platinum. Silver has gone up 25 to 30%. Nobody talks about silver. So everybody concentrates on gold because the same way everybody talks about the US dollar, nobody talks about anything else. The same way we talk about gold. But if you look around the precious metal ecosystem, you're going to find that a lot of the correlation between gold and silver, gold and platinum is very strong. Correlation between gold and silver is roughly 80-85%. So even if it's not gold you're buying, are there other precious metals or commodities that have a good store of value, that have historically relatively low volatility, and have a projection of price increase in the future? I think the answer to that would be yes.
Yeah, quite interesting. We've seen platinum and palladium sitting above $1,000, per ounce comfortably at this point. All right, I guess we have another question. Let's maintain that.
Okay, I'm Usman Yakini. I'm a financial analyst with CPD. So my question is in two parts. I'll try to be brief. So the first one is it's to any of the panelists. There's a point at the point the US, the hegemony, the US power would lose that, and to be fragmentalized, like people would take different paths. Can we get an idea of what the global trade or what the world would be like in a situation where we have the US, China, Russia, India having their own power and everyone is solid? Because I think there's a point around the US having the power. You may imagine a situation where we have different world powers. And secondly is a bit on cryptocurrency, because I don't think we talk enough about that part of finance. As an enthusiast, the last short bully we had about the crypto market crossing $4 trillion. That's a lot of money, a lot of finance. And I know the new tax act that's coming in effect from next year as some kind of to take that in. But do you think the Nigerian government, because the news is Nigeria is number 2 in crypto adoption in the world, so do we see the Nigerian government tapping so much into that? Thank you very much.
Mr. Oshukoya, you want to jump on that, please?
Yeah, I think let me start with the crypto currency world, okay, and why I think that we need to be very careful. I'm actually sitting, I'm sitting on the fence right now because I'm considered to be a bull, and at the same time, I try to be careful advising my clients to invest in cryptos. You are spot on saying that adoption, Nigeria happens to be the second largest, adopter of, cryptocurrencies, and it's simply because if you look at the demography of Nigeria, 60% of the population between the ages of 30 and below, they are vibrant, active, and they are fast-moving youth, just like any fast-moving car. All right, and I belong into that group of 30 and below. Right? Wow. My point exactly is that they've come to recognize digital assets as the future. And because of that, as a government or as a country, we need to create that atmosphere for them. However, what we've not done, other than the fact that the president signed a bill considering crypto, right, as one of the digital assets. But what I would expect all the regulatory bodies to do is to back it up with firm regulations. That regulation, or a global or a pocket of regulations, would help asset managers, investors, to have confidence and comfort in the kinds of asset classes within the crypto space, because you have too many of them. And lately, some people have been beaten and battered recently, investing in derivatives of a crypto that turn out to go belly up. And because of that experience, people would always shy away from it. Is crypto good for payment services? Okay, you can actually use crypto for payment services. Nigeria, for instance, we do a lot of peer-to-peer, P2P. Okay, and from there you see massive adoption of that, right? Because it's very swift. You don't need to wait for 2-day settlement. It is done on the spot. And that is what that particular group of demography, that is what they want. Our youth, they like to stay in bed on their phone. An average youth, in Nigeria especially, stay in bed on their phone and they get all their transactions done. I can't even remember the last time any one of them walked into a banking hall. They don't do that. So you need to understand that temperament as a country and prepare for that. And to do that, asset managers, financial institutions, stockbrokers, we need to come together and create a platform for them backed by regulation that would help those guys in the future. Some of those guys don't hardly invest in any of the local equities. We've done a number of research into how much penetration or how much awareness or interest does the group I just mentioned that I belong to enjoy, or they are interested in buying the likes of First Bank, GTB, or Dangote Sugar. They are not interested in that. The last they heard of it was when maybe their grandfather or their father told them about it, and probably at home when they are putting together or trying to clean the house, they saw papers of those shares. So what is this? They probably trashed them. You need to understand their own temperament and the way they are wired. The way they are wired is it has to be a digital asset, and the rest of the world are beginning to even help with tokenization of those assets and creating derivatives on the back of that. So to your question, what I think we all need to do, all the stakeholders, is to have a concerted effort to create an enabling environment for that. To your first question about, it's a very tricky question, because if the US for any reason has less dominance and you now have China and India and maybe Russia, I'm struggling to imagine a picture of those four guys having equal power or dominance. It's going to be a chaotic world. I can't even imagine it. I would rather that US maintains that power, because come to think of it, is it Putin that you want to I mean, think about it now. Maybe out of those bloc, the only guy that I think that would probably be a bit of insanity would be the Indian president, right? So would they even allow him? And does the country have the wherewithal to drive the rest of the world? I don't think so. To drive this world, you need to be a crazy leader. In fact, to drive Nigeria, what are we talking about? Talk about your home. To drive your home, sometimes you need to be a crazy father or a crazy mother. So talk less about, the complexity of the entire world. Right. You need a crazy president to handle that mantle of leadership.
Thank you so much. Please put your hands together for him. All right.
We have our final question, of course, from Dr.
Thank you. My name is Muda Yusuf. Now, I am concerned about the fact that we are not talking about investment in sectors or areas that create jobs. We have been talking about gold, crypto, dollar. All of these things don't create jobs. We are talking about building an economy that is inclusive. We are not talking about agriculture. We are not talking about manufacturing. We are not talking about construction. We are not even talking so much, apart from Femi that spoke about entertainment. These are critical sectors. And when we begin to build a mindset, especially among your generation, that he's not even talking about all these production areas. I mean, where will that lead us? I mean, what do we need to do? Can we begin to refocus so that we don't find ourselves in a situation that even US find itself now? They are not producing there. That is, they just suddenly woke up now to know that they have to produce. And it's almost getting late. So please, that psychology, I don't know how we can resuscitate it to appreciate issues of production and job creation in our investments. We thank you.
Thank you, sir.
Okay, Dr. Muda, yes, I agree with you that that's it. Anyone that knows me knows I'm one of the key advocates that we need to start producing a lot more. But I'm also very careful not to fall into the trap of having, there's an advantage of having focus. If you're focused on something, it inadvertently means that everything else is blurred around you. You can only see one thing. So while we will need to make productivity and manufacturing a priority, we also need to understand that there are other parts of the economy that need to function equally well as a complement. So every panel will not discuss production and job creation all the time. Number two, if we think of jobs as those who wear suits and ties and go to an office, it will limit it. It was Femi Adebayo that did say there are a lot of jobs being created. I don't use the word job. There's a lot of activity that generates income that has nothing to do with an office. I know a couple of people in Tosin's generation, like you said, wake up every day on their phones, trade crypto for 3 or 4 hours. I know a particular lady, she's 24, 25. She makes on average $100 to $200 every day. Every single day. And that's all she does. 2-3 hours and that's it, she's done. She goes to sit down. And you tell her to go and get a job and she's like, what job in an office will pay me what crypto is making for me? So I think it's, in addition to what you've said, I think it's important that we start looking at the fact that the service, what we call the service industry, has expanded. Those that should be in agriculture, and let's be honest, agriculture is about 40% of employment in Nigeria. But in as much as we like that, the truth is, if we want agriculture to be what it should be in the country, we can't have 40% of the population in agriculture. It means we're producing agriculture inefficiently. If you look at your oil production, Shell, that's the largest of your international oil companies, has 6,000 to 7,000 staff. That's it. Mobil has half of that, but they produce. So if you were to do agriculture in the proper way through mechanized farming and all of that, the people carrying hoes and cutlasses will reduce. So I think we need to shift our thinking from not just how many jobs can it create, but what exactly is the job that contributes to the self-sufficiency of the individual, which is the bottom line of what we're trying to do. Not everybody will go to an office, not everybody will do the formal jobs, but will everybody be able to add value to a sector? Femi Adebayo's sector, for example, content, if you go to Lekki Ikoyi Bridge roundabout on the Ikoyi end, a lot of people are creating content. I have my views on whether that is productivity or not. But the point is, you want people to get a job so that they can sustain a certain living by making money. If the young people have found a way to do that outside the traditional going to the office, question then is, how do we scale it into a manner that creates value across a wider sphere?
All right, thank you so much for that. Prof, you want to jump on that too?
Yeah, sure, why not? Dr. Muda Yusuf, your comments are well received in earnest. But the way I look at, I'm the chief economist at the Development Bank of Nigeria, so impact is what we thrive on. And my job specifically tracks and measures growth across micro, small, and medium enterprises across the country. We zigzag the country to look for SMEs, micro enterprises, who are producing. We facilitate credit through commercial banks, microfinance banks, merchant banks, finance houses, to reach players in the ecosystem. And we all agree MSMEs are the engine of economic growth. So to be sure, what is a micro enterprise? 1 to less than 10 employees. They make up more than 96% of all MSMEs in the country. To be sure, majority of these actors are in the trade and commerce sector. Dr. Muda Yusuf, the type of trade and commerce they do doesn't create the type of job we want to see. I'm going to be candid. It doesn't. So the real question is, how can we move them to the types of trade that creates the jobs we want to see? The types of loans they receive, can it create jobs? Perhaps. Can it grow their business? Perhaps. But ultimately, the real sector, agriculture, everybody will tell you, oh, I know somebody, or they are a farmer. That's the bottom line. Even those who wear fancy suits to the offices, they know somebody, or they farm in the back of their house. That's the bottom line. So the question now is, how many of those people are actually doing it for a living? A lot of people say they don't do it for a living, just to eat. So subsistence farming. Small-scale farming is a different conversation. There's no year-round farming in the country because of irrigation, because of poor infrastructure, and so on and so forth. Insecurity, those endogenous issues. But by and large, the bottom line is this. If the entertainment segment or sector, ICT, and so on, financial services, is actually creating quality jobs that gives people the desired amount of income per month, I see nothing wrong with that. The real question now is this: what enabling policies have been put to bear to support these sectors like light manufacturing, construction, healthcare, education, trade, agriculture, and so on? So that's why I alluded by saying we need a structural policy and an industrial policy that is systematic, that can be tracked, measured, and we can see, in fact, where the rubber really meets the road. Who are the winners, who are the losers, and how can we support the losers become winners? Thank you.
Please put your hands together for this panel. Definitely want to chip in real quick.
Yeah, real quick. I think there's so many disincentives to production in the country. The core of this is infrastructure that everybody has talked about, so I don't want to go into that. But there's another major, disincentive, which is in primary or basic, economics, would tells us that you have 4 factors of production, right? If we take capital, because you have capital, you have labor, right? You have land. Take capital, for instance. It is a major disincentive for production. In our world at Commercial Partners, and we're saying to ourselves that we have a number of clients that have asked for expansion, but the cost of capital that we even advance to them is mind-blowing. And we ask ourselves that how can this business survive production? So if you are giving money to a rice miller, for instance, at mid-30s, that's 32, 3, you ask yourself, how can that company survive? So until we deal with some of these structural issues, it's going to be very difficult for us to move from a consuming nation to a producing nation. And when I say to people that you see Naira at 1,500 and you think that, oh, it's going to continue to 1,400, be careful, because you are competing with trading partners that are producing nations. You are competing with China. You are competing with America. You are competing with Netherlands. You are competing with Belgium. All these partners, they are net exporters to us. And their currencies will continue to be stronger than yours. So I don't think we are there yet. If you look at the evolution of industrialization globally to technology and now to AI revolution, Nigeria is not even in industrial revolution yet. So we are backward. So while other countries, the rest of the world, are moving faster, they are not even moving slowly, they are accelerating. We are retarding. That is a major issue in this country, unfortunately. Thank you.
Thank you so much. Please put your hands together for him and this great panel.